A very good evening, ladies and gentlemen. We are back with yet another program of Committee on Management Accounting. Let me very candidly put it across that we at the committee level are totally committed to ensure that you have the best of the information, the best of technical knowledge and robust moving. So I will have my own session, but before that I will request Mr. Gyan Sharma, the master of ceremonies of today's session, to start the proceeding and let us move ahead. Over to Mr. Gyan Sharma. Yes, Mr. Sharma, the dice is all yours.
Thank you, sir. Namaste and very good evening, everyone. I, CA Gyan Prakash Sharma, welcome you all in this today's virtual CP Hours meeting seminar. Last few years are a transitional and eventful period for our profession, and especially when we see the increasing number of frauds. We realize that this is the high time to understand the irreplaceable role of management accounting as a tool of prevention and control of fraud. It is really great to see under the able leadership of CA Charanjo Singh Nanda, Chairman of Committee on Management Committee of Accounting, today we are able to join this wonderfully designed VCM on very contemporary topic of management accounting as a tool for prevention and control of fraud. This VCM is organized by Committee on Management Accounting and hosted by Sangrur branch of NIRC of ICI. In this program, we have with us our past president of ICI, CA Manoj Phadnis sir, and two more expert speakers, CA Satyajit Ghoshal and CA Pradeep Godbole sir. Before we proceed further, I would like to invite CA Pradeep Mittal, Chairman of Sangrur branch of NIRC of ICI, for his welcome address and a introduction of CA Charanjo Singh Nanda sir, our Central Council member. Pradeep Mittal sir, over to you.
Thank you, Gyan Sharma ji. Good evening, ladies and gentlemen. Respected CA Charanjo Singh Nandaji, Chairman Committee on Management Accounting, and Vice Chairman CA Nand Kishore C. Hegde ji. Respected CA Manoj Phadnis ji, past President of ICAI, CA Satyajit Ghoshal ji, Assistant Vice President Finance and Accounts at Tata Chemicals Limited, CA Pradeep Godbole ji, eminent speaker, moderator of today's session, CA Gyan Prakash Sharma ji, and my dear professional colleagues participating in this webinar. I, CA Pradeep Mittal, Chairman Sangrur branch of NIRC of ICAI, welcome you all to this virtual CP meeting on management accounting as a tool for prevention and control of fraud, organized by the Committee on Management Accounting of the Institute of Chartered Accountants of India and hosted by Sangrur branch. I would like to extend my warm gratitude to all the professional colleagues who took time to participate in this virtual meeting despite their busy schedules. I am thankful to the Committee on Management Accounting of ICAI for giving us the opportunity to host this national level virtual meeting. I take this opportunity to introduce the Chairman of the Committee on Management Accounting of ICAI, CA Charanjo Singh Nandaji. Nandaji is a fellow member of the Institute of Chartered Accountants of India with over 3 decades of professional expertise. He is presently a Central Council member of the Institute. Previously also, he had been in the Central Council of the Institute for a rich tenure of 12 years during 2004 to 2016. Apart from being the present Chairman of Committee on Management Accounting of ICAI, he is also the Chairman of Internal Audit Standards Board of ICAI. He is the Vice Chairman of Continuing Professional Education Committee of the Institute of Chartered Accountants. Nanda sir is a great leader and also the member on board of the 26 committees of the Institute of Chartered Accountants of India. In the past also, he had been nominated as the IRDA Steering Committee for implementation of risk-based capital regime. He had also worked as the Vice Chairman of Corporate Social Responsibility Committee of ICAI and also was Vice Chairman of Banking, Financial Services and Insurance Committee of ICAI. He was the member of Quality Review Board set up by the Government of India and had also been member of SAFA Committee on Improvement in Transparency, Accountability and Governance. In the past also, he had been chairman of various committees of the Institute of Chartered Accountants of India, like chairman of Committee on Internal Audit, Chairman of Committee for Members in Industry of ICAI, Chairman of Women Members Empowerment Committee of the Institute. I believe that the presence of Nandaji, along with other experts with their varied experiences, will add to the success of this meeting and hope you all will gain the utmost benefit out of it. Thank you all. Over to Sharma ji.
Thanks a lot, Pradeep ji. As very rightly introduced by you about Nanda sir, I just want to say that we understand and we faced a lot of brand and branch setting skills by Nanda sir during your internal auditing standard board chairman. And this year, apart from IASB chairmanship, Nanda sir has also been nominated as the chairman of Committee on Management Accounting. And I'm very much sure that this committee shall set a benchmark of new excellence of this year. I request Nanda sir for his chairman address for this session.
Thank you, Mr. Sharma. I'm truly honored to present the chairman address on this August day. I'm thankful that Mr. Ghoshal, on my mere insistence and very short time, towering his love on this profession, came forward to give his keynote address as the CFO of Tata Chemicals Limited. I am Mr. Godbole, a person who is sought after in the entire corporate India. He was so kind that he said that he would come and address and take the full session. I am very much thankful to my elder brother, my mentor, CA Manoj Fadnis ji, who came forward and would be giving a special address on prevention and control of frauds. I am thankful to Sangrur branch, who have both the chairman and the vice chairman have been kind enough to come here. And I am thankful to all of you. The participants have joined in large numbers. We had 1,500 registration, and let me tell you, all are full. We have 1,500 subscriptions. Ladies and gentlemen, our institute, the Great Institute of Chartered Accountants of India, was set up an Act of Parliament way back on 1st July 1949, when the most important document to the democracy, the Constitution, was not adopted. All of you are well aware that the Constitution to this great country was promulgated on 26th January 1950. The pertinent question that arises is, what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India even before setting up its own democratic setup? The answer is very candid, very simple, very forthcoming. They were looking for a disciplined band of soldiers to steer this country out of confusion. And let me very candidly admit, the circumstances are not different today. We live on the same world. We are again on crossroads. And I am fully sure that this profession will bail out chartered accountants. The chartered accountants will bail out the entire industry, the country, and put them on the path of progress. Today's topic is well crystallized, is well debated, and then we brought it before you on the table. Management accounting as a tool for prevention and control of fraud. Management accountants continue to face new challenges and business issues characterized by accelerating change. This change has brought in this drive of organizations for next century. They have brought in certain such hazards which have become very difficult to sustain. In the modern age, it is increasingly important for the management accounting systems to have strong internal controls in place so that they can mitigate the overall risk of errors and fraud within the company. It becomes imperative for us to identify the frauds and then mitigate them and ensure that in future, if any such thing, any fraud, any risk, any error arises, it is equitably mitigated. What is the key role of management accountants in prevention and control of frauds? Very much. The management have to always be laced with foolproof strategy to ensure that the internal controls and standard operating procedures do not impose any inherent risk which inevitably might lead to significant financial losses or hamper the overall growth of the organization. We have seen disruptive technology has set out so many companies and brought in so many companies. The role of management accountants in detection, prevention and control of frauds is also very crucial. Having proper management accounting and reporting system ensures that the organization has a proper preposition in place to report and perpetually check for any discrepancies and material misstatements. Internal risk assessment is again a core word. It is an important strategy in this aspect, and identification of all the inherent risk procedures and protocols might be a preventive measure that can reduce the overall risk. Going further, while dealing with control and fraud, duties of management accountants include recording and crunching numbers, helping people to move ahead. I would like to just very briefly dwell upon the areas where the management accountants deter and prevent fraud in any organization. You need to segregate the accounting duties. Very, very important. The same person isn't authorized to write up and sign a check, the maker-checker concept. The second, know your employees. All employees needs to be known. KYC is very, very important. Third, maintain internal control system very effectively for cash disbursement. Wherever cash comes, it calls for so many frauds. So that needs to be strongly strengthened. Scrutinize business bank accounts, payments to wrong vendors, misappropriation, embezzlement of money is something which is so common, so inherent, so perpetual, so common that we need to have an eagle's eye on it. Audit the books properly. Audit is very important, not only statutory audit, but internal audit and particularly concurrent audit, which puts the things on bay. Audit the books properly, and then you need to train your employees to prevent fraud. Training of employees is again very, very important. Protect credit card information of the key personnel and of people who are involved into the entire infrastructure and ecosystem. To conclude, effective management of fraud involves both minimizing the possibility of fraud incidents and maximizing the probability of early detection of such incidents. Concurrent audit will always bring us at a perspective where we start understanding how we can early detect them. As mentioned earlier, minimizing the risk of fraud occurrence requires robust management accounting systems and controls that will act as a filter to prevent most frauds from their inception. Ladies and gentlemen, we have so many experts today, a great session to reckon with. So I will just end with one thought process. We management accountants are taught to understand and learn by example and by circumstances. A couplet in this effect, a management accountant speaking to another professional, he says, "Kuch to fark hai teri aur meri taaleem mein." The management accounting saying to the third person, "Kuch to fark hai teri aur meri taaleem mein. तूने उस्तादों से सीखा है, हमने हालातों से सीखा है." The English version is that there is difference between both of us. The education, the knowledge of both of us, because a normal person learns from his teachers and we learn from circumstances. So wishing this session a great future ahead. I have Mr. Sharma. I have the most respected colleagues who would take this forward. So ladies and gentlemen, I go back to Mr. Sharma and wish this seminar a great future. I would all urge upon you to write to us, to speak to me personally. You have my number on icai.org so that we are able to effectively bring more such programs to ensure that CMA comes out to be one of the most robust, one of the most happening committees in such trying times. Your chairman and the entire board, the entire committee is committed to ensure that we give our best. Thank you. Thank you so much. Please, over to Mr. Sharma. Yes, Mr. Sharma, the dais is all yours.
Yeah, thanks a lot, sir, for such a wonderful start of this session. It is really amazing to listen you and learn from your side. And as usual, you very precisely summarize the importance of management accounting in current era. Now, I would like to introduce our eminent speakers. We have with us C. Satyajit Ghoshal, Sir, Assistant Vice President Finance and Accounts of Tata Chemical Limited. Before I invite him for his special address, let me introduce myself. Let me introduce Satyajit sir. Satyajit Ghoshal sir is a fellow member of Chartered Accountants, fellow member of Institute of Chartered Accountants of India. He did his graduation from Sri Ram College of Commerce, Delhi, and MBA in Finance and Marketing stream from XLRI Jamshedpur. He has global experience of more than 25 years in finance, accounts, and taxation field. He has served as a leadership role in various organizations in automobile, steel, pharmaceutical, glass, fertilizers, consumer product, and chemical sectors industries. Mr. Ghoshal belongs from Mumbai and extensively traveled to various countries in USA, Europe, Asia, and Africa Pacific region. Mr. Ghoshal has served as position of a finance controller, director of finance in many multinational companies, and currently he is Assistant Vice President Finance and Accounts in Tata Chemical Limited. Satyajit sir has vast experience of treasury and retirement fund management, global insurance and risk management, domestic and international taxation, etc. Satyajit sir has excellent competence in leadership, interpersonal skills, communications, digitization of process, and knowledge management and all. Sir, it will be great for us, or good to us, to learn something new from your side, from your experience. Now I would like to invite C. Satyajit Ghoshal sir for a special address of this session. Sir, over to you.
Thank you, Mr. Ghoshal, for coming. I also welcome my elder brother, our past president, my mentor, my guide, C. Manoj Fadnis, who has also joined. Sir, you're most welcome, sir. Yeah. Over to Mr. Satyajit Ghoshal, sir. Please, sir. The dais is all yours.
Thanks, Gyan Sharma, for my introduction. You have gone a long way in giving my biodata. Thanks for that. I think I must thank Mr. Nanda for giving me a promotion just now in his talk. He told that I am the CFO of Tata Chemicals. Thanks, Mr. Nanda, for your wishful thinking.
Sir, God willing, you will be at that position, sir.
But as of now, I am Assistant Vice President, Finance and Account, just for clarity and for record for this purpose. So, good evening, friends. I am very glad to be a part of this session. And I am really excited by the speech which Mr. Nanda gave as the inaugural speech. And thanks to CMA for inviting me. I'd like to pay my respect to Mr. Nanda, Mr. Hegde, Mr. Godbole, and Mr. Manoj Fadnis, past president ICAI. And I must congratulate the CMA committee, for selecting such an interesting topic. And this topic is so relevant today. I can say that this is one of the most important topics which are being talked about in the boardrooms and the audit committees of various companies. The situation we are all facing. So what I'll do, I have got a limited time slot which has been given to me for about 10 minutes. So I will try to divide the discussion based on my past experience into 4 buckets. So first, I'll try to dwell upon that what is management accounting, and what exactly is the role of a management accountant. And second, I'll try to touch upon what exactly is fraud. How do we define fraud? Third, I think the important factor, whatever the small analysis I could do, is that I'll try to touch upon what is risk management and what is the role of risk management. And fourth, I'll conclude by talking about that what exactly is the management accounting as a tool for fraud detection and control. And I personally feel that any particular section of the accounting profession, whether it's management accounting, it's all driven by a person. So if the person has got, who is a chartered accountant or cost accountant, has got the qualities in him, then he can make any tool lively, and that will make all the difference. The subject matter by itself is very static in nature. A person who is on the chair, who deals with the matter and deals with the situation, he can make all the dynamic difference in the situation. So to start with, out of the 4 buckets, the first is what exactly is management accounting? So, my dear colleagues, I need not preach here, but management accounting, as all of us understand, is a tool. So, what exactly is this tool and why it is there? It is a tool to assist the management for better planning and control to increase the stakeholders' value. Right. So, when we say tool, so I'll dwell upon the word tool. Now, this tool is basically on what? This tool is on the financial and the non-financial data that the organization has got. Right. So financial data would typically mean the accounting data, as all of us understand, and non-accounting data also, which could be, the data with respect to the various taxation data, various treasury data. Those data points are very, very important. And non-financial data would mean the various customer databases, the supplier databases, and other stuff. So when we say the tool, now this database that the organization has got, and I am giving a reference of a organization which is a global organization and in a particular industry. So let's say a listed company. So all those databases which are available for data analysis. Now the job of a management accountant is two-pronged. If I divide that thing into 2 parts, that data can be analyzed as a data which is past oriented to give answers to what exactly happened in the past month, past 1 year, or the past period, and why it happened. So which is a past oriented data analysis that a management accountant can do and put up data reports to the management. Second, the orientation of data analytics could be a future oriented, where he uses the same database and using various analytics tools, he can analyze that what is predictive out of the data, what he can predict, what can happen, what are the possibilities. And he can also use artificial intelligence and come out with a prescriptive method that what can he prescribe, that this must be done under the current situation. So a management accountant is a very, very robust position, and a person can use this for both historical data analysis and the future data analytics. So that is the first bucket of management accounting. So it depends on the person who handles it, and I personally believe that if the person is capable and knowledgeable and kept himself updated, can really use the tool very well. Now coming to the point, what exactly is fraud? Now fraud, as all of us understand, and basic meaning of fraud is it's an intentional activity. So it's not a casual error by a person. It's an intentional activity to gain personal benefit. So it's an intentional activity to gain personal benefit, which could be direct, which could be indirect, and which may be illegal, and which is against the policies of the company. So now the point comes is, if you have a situation where there are frauds taking place. Now, as I'm sure Mr. Godbole in his speech will cover the various types of frauds which are there and how to deal with that in detail. Broadly, new emerging frauds are happening in the technology sector. In the industry, I can tell you very clearly, there are a lot of cyber crimes which are taking place. Info security is at stake, and we are forced to take mitigation tools like cyber security policies. In our case, I can say that we have recently gone for a global cyber security policy of millions of dollars. So why we are spending so much of money? This is basically to, in case fraud happens, it's a tool to control, the damages which the fraud can take place. Apart from this fraud, which is the new age fraud like cyber crimes, there are traditional frauds in the asset misappropriation or financial statement, wrong inflation or deflation of assets and liabilities and expenses. So this can be done. Now, this was the second bucket. So we have touched upon management accounting, we have touched upon fraud. Now, what exactly is risk management? In every organization, at least I have worked in 5, 6 sectors, risk management is one of the most important committees the audit, the board has. So there is a risk management committee, which the many companies have got, and they have a, sort of feedback to the audit committee and the board on the various matters. Now, what exactly this risk committee does? It basically prepares a framework or gives a direction for identification, evaluation of the risk in order to minimize the impact of unfortunate events. Now, what exactly is the unfortunate event? And to ensure that the opportunities are optimized. Now, when we say unfortunate event, the unfortunate event or a downfall can happen because of 2 reasons. It could be, natural, because of reasons which are beyond human beings. Let's say there's a flood, there's a fire kind of things, there are earthquakes which takes place. So no person is involved in that. The other kind of unfortunate event can happen when a person is involved. Now, when a person is involved, it could be an internal employee, it could be an outsider, or it could be a collusion. So when there's a collusion or an internal person is involved and an outsider person is involved, then it becomes a case of fraud which comes into picture. Now the point is, this risk management within organization or larger corporates, at least based on my experience, it has got a risk management committee, then the risk management group, which is led by the MDs and CFOs of the companies, and the risk management head. And many a times the risk management head is actually the internal audit head also. So they have a agenda and a planning sheet which is approved by the audit committees, which gives a perspective that what are the preventive and control mechanisms of how to strengthen the internal controls of the organization, how to ensure that the assets of the company are safeguarded. So they have an elaborate plan which is put into action, and it could be in-house, it could be outsourced. Now you have, now we have touched upon 3 areas. We have touched upon management accounting, we have touched upon what is fraud, we have touched upon what is risk management. So finally we come to what exactly is the role of a management accountant in this situation. When you have internal auditors, you have risk committees, you have, the risk head in the organization, and they are trying to do this. So my take on that is, pretty simple. There are 2 or 3 points I could think of in this area. The role of a management accountant would be, in the current situation, is number one, do a intelligent data analytics. We talked about the data, the type of data. Do a intelligent data analytics using various tools, which could be RPA or IA tools or various other tools, and provide data points to the management, for discussion where possible frauds could be there. So once he does the data mining and data analytics, he provides the first data point which is available in the various management meetings that becomes the ground for discussion of fraud, the possible fraud that could have happened. With the data will give you signals for that. That is the first role of a management accountant can take. The second role he can take is, his role would be, as my personal take is that he needs to coordinate. See, today's world, the organization is so complex, not a single person, not a single role can take care of these, the fraud activities which are taking place in a very, very high sophisticated manner. So the role of a management accountant should be essentially to coordinate with the internal auditor, to the risk head of the organization, and do a deep dive into the data analytics which has brought suspicious data points into management discussions, and try to identify the perpetrators of fraud and see that where are the gaps in internal control. That is the second role. He has to collaborate with the internal auditor and the risk team. And the third role I see a management accounting playing there is basically to formulate a robust internal control at multi-level trigger points. When in future such things happen, there got to be multi-level trigger points taking place in the organization that not only the management accountant can identify, the various other operating people who are actually doing the job in the organization can identify. And finally, I think his role would be to scan the environment, the industry he is in, or the other industries, and take a stock of what kind of fraudulent activities are taking place, and visualize situations which are abnormal, and to come out with a plan that how to mitigate that for future purposes. My take on the entire subject is that management accounting or a management accountant in your organization today is a very busy person. His primary job is to help management to identify opportunities, how to increase the value of the stakeholders. Stakeholders would be not only the shareholders, the customers, the employees, the various vendors of that. His role is very wide. So fraud detection could be there as one of the part of his role. It cannot be the sole purpose of the job. And he has to collaborate with other people I just mentioned, like internal audit and the risk management team, in order to come out with good results. And he has to be a team player. He cannot do it individually as such in order to take care of that. So that's broadly I just wanted to cover. And I think the time given to me is over for that. So I thank all of you for patient hearing and hand it back to Mr. Sharma. Thank you.
Thanks a lot, sir, for your special address. Set the tone for this session, and you very precisely defined what is the fraud and what are the management tools to prevent the fraud, and how the management accountant can play an important role to prevent the fraud. So it was a full of learning session. And now moving ahead, I would like to introduce pride of our profession, past president of ICI, CA, a very knowledgeable but humble professional, CA Manoj Phadnis sir. CA Manoj Phadnis sir is the past president of Confederation of Asian and Pacific Accountants, a regional international organization of 32 professional institutes from 23 countries from Asia and Pacific region. CA Manoj Phadnis sir was elected as president of the Institute of Chartered Accountants of India in the year 2015-16. He did his graduation from Indore University and qualified as chartered accountant in January 1987. He also holds diploma in information system audit. He has served as non-executive director of the Insurance and Regulatory Development Authority of India and the member of National Direct Tax Advisory Committee of Central Board of Advisory Committee. He has served non-executive director of insurance. He was chairman of Public Sector Financial Management Committee of SAPA from November 2015 to November 2017. On 8th November 2017, he has been elected as President of Confederation of Asian and Pacific Accountants for a term of 2 years from November 2017 to November 2019. He was also nominated as a member of the Small and Medium Practitioners Committee of the International Federation of Accountants for term January 2016 to December 2018. He was non-executive chairman of MP Stock Exchange Limited from 2012 to 2014. He was also a member of company law committees set up by Ministry of Corporate Affairs, Government of India in 2015 for suggestions on amendments required in Companies Act 2013. Presently, he is independent director on board of Federal Bank and serves as chairman of Audit Committee. He is also on the board of many listed and unlisted companies. He is nominated as a member of the Standing Committee on Accounting Issues constituted by Insurance Regulatory Development Authority of India, and he has specialization in corporate accounting and reporting standard, direct tax, corporate laws, and FEMA, etc. He has presented more than 1,000 technical papers in seminars and conferences within India and internationally. Now I request you, sir, for your keynote address. Over to you, sir.
Sir, welcome. Welcome, sir. My salutations to you, sir. Great, sir. Great to listen to you. Excellent program going on, sir. Mr. Satyajit Ghoshal also spoke exceedingly well. You are there, then we have Mr. Godbole. Please, sir, please carry forward.
Thank you very much, my very esteemed colleague, former colleague in the council and currently the chairman of this committee which is organizing this program, CA Charanjo Singh Nandaji, a person with a lot of dynamics, passion to do something, always something better for the profession. I'm very happy to see that you are organizing this webinar today, and thank you very much for inviting me. I had the privilege of listening to Mr. Satyajit Ghoshal just now, and the wide knowledge, Mr. Ghoshal, that you have is evident from what you just spoke for last 10 minutes. In 10 minutes, you spoke so many things. So I'm sure what Nandaji mentioned that you are the CFO. Even if you are not the CFO today, I'm sure it's just a few blocks away, and we look forward to seeing you as the CFO of your company very shortly.
Thank you, sir.
And thank you very much for those very wonderful observations and remarks that you made about the management, accounting management, how it is being used as a tool. And particularly, I was impressed by what you mentioned about the kind of frauds which are taking place. And in that context, let me also add on, as friends, you are all aware,
I think there is some technical problem in Manoj Pandit's session. Let us wait for a minute.
Maybe technical glitch, he'll come back soon. Just for some seconds.
Yeah, sir, I join now. I think there is a network issue. Let us bear patience for a minute.
I'm sorry, Nandaji, I was disconnected for some time.
No issue, sir. No issue. Please.
My apologies to all the members who have joined this program.
Not at all, sir. Sir, you can continue on low data also. If you are not visible, you can continue speaking, sir. That is also not an issue.
Join.
Nandaji, with your permission, I switched off my video so that the voice is more audible.
Yes, sir. No issue.
Please carry on, sir.
So, thank you very much, and my apologies again to the esteemed members for this technological problems. But technology and the issue which we are discussing. Technology and the issue which we are discussing regarding frauds is very interconnected.
नहीं तिवारी अजीत तुम मेरा नाम मेरे रीजन में जहां चाहिए मेरा नाम दे दिया करो, ऐसे पूछा मत करो.
So, friends, speaking on this, on the issue, what Mr. Ghoshal very rightly raised is that in context of the cyber security issues which are coming up today, that is one big area where we need to have a look at. The frauds are not happening the way the frauds were happening in the earlier days. It is technology based frauds, and each one of us is liable to be conned into a fraud. And that is where the companies are required to see that they have the adequate policies, they have adequate tools available to prevent frauds taking place from within the organizations. The banking and financial industry, the banking and the insurance and the financial sectors particularly, are more vulnerable to the frauds than possibly the other companies. And today, if you look at the banking sector particularly, large amount of resources are being deployed in strengthening the IT controls, in strengthening the IT systems, and seeing that the attacks, the cyber attacks that may take place, and the cyber attacks take place globally. They can come from any part of the world, and even the smaller of the banking organizations could be a victim of such a fraud. It has happened that, and today what is happening is, every bank wants to give the best of its services to its customers. The problem is with the smaller banks, the cooperative banks. The customers of the cooperative banks are also demanding the best technological services, and therefore the banks are forced to invest for the right kind of a technology. And in such cases, the weaker banks are more liable for cyber attack than possibly the more stronger and more better organized banks. As you would have seen in the past few years, there have been cyber attacks on some of the cooperative banks, and within hours the banks were put to a huge amount of loss. So it is imperative today that the managements put in proper controls, management has proper tools, and people who are adequately aware of using those tools in the unfortunate event of a cyber attack. So cyber security is going to become more and more relevant and more important in times to come. And frauds are, the fraudsters, so to say, will be generally those people who are smarter and more intelligent than the people who are putting into place the relevant mechanisms. So the fraudster is always trying to stay ahead of whatever mechanics and whatever systems which are being put into place. And that is, to my mind, an ongoing activity which the corporates and the management accountants and all of us as auditors or as corporate executives will have to look into. So today, speaking from the audit perspective, fraud reporting has become a part of our audit reports. While we say that my objective in the audit is not to detect fraud, but the standards on auditing would require an auditor to build in a scenario of a possible fraud which could take place. So while the objective is not to detect a fraud, but at the same time the objective is also to be aware of a possibility of a fraud and to ensure that no material misstatement takes place in the financial statements. Now there are various small housekeeping, bookkeeping things which were being done in the good old days, and possibly some of those steps have been lost sight of. So if you look at a simple thing like reconciliation, so reconciliation of in terms of value and reconciliation in terms of the pending entries is generally one area where there is so much of a black hole that the possibility of a fraud cannot be eliminated. And therefore, larger the organization, more important it is to see how many are the dormant accounts, how many are the accounts where there have been no transactions, and how many entries number wise and value wise which remain in the suspense accounts or which remain unreconciled for a long period of time. And traditionally this has been an area where we have been seeing that frauds have been taking place. Now we have adequate management tools available to see that such reconciliations take place on an ongoing basis and they are rectified therefore thereby eliminating the possibility of a fraud which could take place. Friends, I would like to take us pause here, stop here for the time being. Like all of you, I'm also keen to hear Mr. Pradeep Godbole and the other speakers on their deliberations. But thank you very much, Nandaji, and thank you very much in the CMA team, Mr. Surendra Pal and all others, for giving this wonderful opportunity to me. Thank you, sir.
Sir, thanks a lot for such an excellent keynote address. It is amazing to see that your entire address was full of practical approach, which was reflecting length of your experience. In continuity of this program, let me invite CA Pradeep Godbole sir for his deliberation. He is eminent speaker in management accounting field. First, let me introduce CA Pradeep Godbole sir. CA Pradeep Godbole sir is fellow member of Institute of Chartered Accountants of India and having experience of more than 25 years in banking and financial services, business and technology consulting, auditing, accounting and management consultancy. He has served as senior management positions at some big organizations like Ernst & Young, Oracle Financial Services Software, Wipro, Deutsche Bank, etc. He is independent director of South Indian Bank. He is also chairman of IT Strategy Committee and member of board committees. He is consultant and advisor to many financial institutions and technology companies in India. With a blend of experience in financial services and technology industry, Pradeep sir demonstrated through leadership, practical insight in CXO suite interactions, and executed large business and technology projects at top-tier banking and financial services organizations across the world. As part of his work, Mr. Godbole had trained and mentored large teams and won multiple awards for greenfield projects. Pradeep sir is a guest faculty at Institute of Chartered Accountants of India also, and he is also a speaker at many professional bodies and forums. After introduction, we understand that the Pradeep sir has vast experience of management accounting field, and we will learn many practical aspects of role of management accounting for prevention of fraud. Now I would like to invite Pradeep sir for his words of wisdom. Pradeep sir, please start your deliberation.
Thank you, Gyanji. Good evening, and my salute.
It's a great honor that you're here. Please carry on.
Yeah, thank you. And my salutations to Manoj Fadnis ji, our past president, Nandaji, other senior functionaries from ICAI and the CMA team, and of course Satyajit ji and all the professional colleagues. Thanks for giving me this opportunity. And Manoj ji, Nandaji and Satyajit ji already talked about and gave the broad spectrum of management accounting, where the industry is heading or where we should be heading as management accounting profession. So I try to build upon that topic, and incidentally I will draw upon some of the points which Mr. Ghoshal had raised during his short conversation. So I'll build upon that. So as we know, management accounting, we have studied and we have practiced it for a long time, and it's been mainly used for business decision making. So now today we will see another angle of how it can be used for fraud prevention, right? And the examples which I will be giving is based on my past experience as well as talking to some of the senior practitioners in the field. But I have got a limitation that I have worked mainly in two industries, IT and banking. So many of the examples could be in that industry, but I will try to generalize it as far as possible, what can be applied across the industry. My feeling is that the principles and the framework which I am talking can be applied across the industries, right? So I'll just share my screen and we can get started. So I hope the screen is visible to you.
Yes, sir.
Okay, so I'll just briefly spend few minutes only on initial slides so that we have more time on the tools and techniques part of it. So fraud, as we know, we have studied law, so we know the definition of fraud. In a simple layman's term, it's a wrongful gain to one person and a wrongful loss to another party, either by concealment of facts or information or otherwise, right? And there are three sort of components to a fraud, and that is called a fraud triangle in the technical jargon. First is the motivation, which is called need and greed, and the personal trait. So what do we mean by need and greed? Sometimes the person needs cash, so he will be tempted to do fraud. In other cases, especially at the senior management fraud, it's a greed which is there. So you have heard about the Enron scandal which happened. There, the managements were trying to prop up the share prices by showing higher profits. So it was a greed. The higher bonuses, higher compensation was or meeting the targets was the kind of inclination which was there. Right. Second, personality and traits again comes from the personal characteristics which are there of an individual. We have heard about the ethics and values and the tone at the top. So the individual may have his own personal traits, but the organizations are trying to influence the behavior by the tone at the top. So you would have heard the term that zero tolerance for frauds is a terminology which is used across the boardrooms which are there. The second thing, this is the motivational part of it, why the frauds will occur. The second part of it is the opportunity. If you have to do a fraud, there has to be an opportunity for you. And that will come from the weak internal control system or weak controls over the assets which are there. You also, in some cases, that opportunity also will come by the fact that there are no controls and there is no fear of any detection which is there, or there could be ambiguities in the policies which are there, and that will drive the opportunity for it. And finally, there is a third aspect to it, and which is more psychological in nature, where it's a rationalization of the fraud. Sometimes the individual will rationalize it by either because of the peer pressure or fear of getting shamed or getting caught by colleagues, or it can be even termed in some cases that it's a harmless activity and need not be considered as a fraud. Or in some cases, it could be justified also by the employees to say that the management is doing certain things, so that is why I am doing this type of activity. So that kind of a thing which will be there. So if you understand the fraud triangle, you will be able to better control it. You will understand what the motivation is, where the opportunities are. What Nandaji was talking about, the internal controls and the inherent risk assessment and all that will play out in this particular space. And the rationalization part will have to be controlled through the sort of influence which the top management can have on the behavior of the employees. So if you look at the types of frauds, if I have to look at it, first type of fraud is the asset misappropriation, which is like a cash related frauds, which could be cash theft or fraudulent payments, or it could be skimming kind of activities like not recording the sales or not recording the receipts which are there, teaming and leading, which we already all know. So these type of activities will be there under asset misappropriation. Inventory and other assets, again, there is a theft which is there. You could have the recording related frauds which are there. So under recording of purchases, under recording of sales, all these activities could be there in this. Why I have added other assets is that apart from these physical assets, there is another type of assets which is getting prominence in recent time, and that is the intellectual property or the business knowledge which is there. So there is a theft of critical business knowledge or the intellectual property. This is one other area where the employees could steal away, or even the outsiders, not just employees, even the outsiders will try to steal the information or the assets in the intellectual property assets which are there from the organization. The second type, which we all know being accountants, is the financial statement fraud, which will have the asset or revenue overstatement or liability or expense misstatement, which is there. And it could take multiple forms like improper valuation, fictitious accounting, which is there, not recording the liabilities or expenses which are there, or over statement of assets or revenue which will be there. There could be timing differences which are there. So we have got good understanding with our background and training what we have got. So the second category is the financial statement fraud. The two categories, asset misappropriation and the financial statement fraud. They form the biggest sort of fraud universe at this point of time, where the number and the amount of loss is very, very high. Having said that, the other two categories which are coming up, they are also becoming very, very important. Corruption, again, is very, very important in terms of conflict of interest, where the directors or the senior management personnel will have their own entities where the contracts will be awarded. Or it could be bribery cases, which could be bid rigging or accepting kickbacks, all those kind of things which will be there, right? The next one is the technology related fraud, which Manoj sir actually talked about, and this is becoming very, very important area. So technology related fraud will cover multiple things like the password related fraud, OTP, CVV sharing, unauthorized access to the IT systems, identity theft, phishing, vishing, where the fraudster will impersonate either as a bank or as an bank employee and try to get that information. Or you will get an email spoofing will be there, that you will get an email looking like it's coming from the bank, or it could be account takeover, fraudulent funds transfer, which could be there. So these could be a sort of more or likely an individual attempt of fraudsters which are there. And there are some in cyber. Why I am distinguishing is that there are organized efforts which are there, and you would be surprised to know that there could be an attack organized by the fraudsters on any organization as low as paying $100. You can have the outsourced service to attack any organization at a price of as less as $100. And that is where what Manoj sir said in terms of beefing up the IT controls and the security comes into play. So the framework which we are talking about will in a way will be able to help in these monitoring activities, and that will tell us if something fraudulent is happening. And finally, I'm putting the frauds into industry-specific frauds, which are very much unique to each industry. So banking will have the credit fraud, securities and capital market will have the frauds, what we have seen in the securities scam, or insurance will have the claims-related fraud. Cards will have a universal experience of frauds happening. And other industries are also not free from fraud. So IT, healthcare, telecom, retail, all these also will have their own share of fraud. Now, if you have to control the fraud, you need to measure how much is the risk which is there, right? So the risk can be measured based on the fraud risk, which is calculated as impact and likelihood. And just giving a simple example with cards. So for example, you notice that there are 50 card related frauds or complaints which the customers are making, and average credit limit which you are giving is say 10,000 rupees. 50 into 10,000 is roughly 5 lakhs you are having as an expected loss which will happen over the period. And normally in management accounting or even in budgeting, this is treated as an expected loss when they do the budgeting for it, right? So that impact and likelihood will tell you what is the amount of loss which you are likely to lose, and how much is the probability of that loss happening, right? So we have to also keep in mind that you can put thousands of control to prevent each risk which is there. But when you put controls, there is a cost associated with it, right? So what you have to ensure is the cost of control is not higher than the amount of loss which you are likely to incur. Right. So you have to balance both the angles, the risk as well as the cost of the managing that risk which is there. Right. So what you have to do is that you have to use the proportionality principle, as we call it. So higher the risk, you will have the higher rigor of control which will be, and monitoring which will happen relating to that particular risk. And the efforts what we will make will be towards reducing either the impact of the fraud or the likelihood of the fraud, or you will try to reduce both the frauds, right? So both types which will be there, right? We talked about asset misappropriation and the financial statement frauds. These are the two most important frauds which are there. and more discussion today we will do around these frauds. But having said that, I will cover the technology related frauds also as part of the framework what I'm talking about. So if you look at this, if you take these two cases of fraud, asset misappropriation and financial statement fraud, what is really happening is that either there is a misappropriation of the asset or a cash flow which is there, or you are trying to change the balance sheet structure. That what I mean by change in the balance sheet structure is that you are trying to project a higher amount of assets or higher amount of revenue when it does not exist, or you are trying to show lesser amount of liability or expenses than what actually it is. So you are trying to change the financial statement structure which is there using this fraudulent mechanisms which are there. So what in nutshell, what you have to do is that we will have to focus based on the areas where there is high risk, the inherent risk, what Nandaji was talking. You have to identify that and put in more rigor around those areas, put in more controls and monitoring around those. So you are able to detect the fraud early. So it is not enough to detect the fraud once it happens. You have to prevent the fraud also. So the effort should be first prevention, and if by chance, if your bad luck strikes, if you do face a loss, then you should know it early. You should have the bad news early rather than somewhere down the line. And in case of technology frauds, what we have seen, it is a cooperative society case where there was a cyber attack. The fraudsters actually entered the network of the bank. They were observing all the activities for almost 6 months, and then they actually attacked and took away more than 90 crores. This is a very recent case. It happened in last few years, right? So that is the kind of thing which is happening now. So it is not that the attack will happen on day one. There will be a sort of observation period which the fraudsters will enter and do it, and then they will attack it, right? So that is how it will happen. So I'll take this slide just in a minute because Satyajit sir has covered it in very much detail. So I am trying to distinguish between the financial accounting and management accounting. Both will emanate from the transactions and the activities and the recording of the transactions which are there. Where management accounting will go further is that you will have additional information which you will gather, which could be financial as well as non-financial, as Satyajit sir was saying, and it could be calibration of the information, what is there. Just to give you an example, in financial accounting, you will only identify electricity expenses. But in management accounting, you may go further down to say how many units were consumed and why the consumption has gone up vis-a-vis the previous period, why the units have increased. So you will do that kind of activity. So typically it has been used for efficiency measurement, improvement, sound business decision, but fraud control and prevention also will be one of the objectives which we will talk about now. So what are the tools and techniques which we can use for fraud prevention and control? So in my view, there are three possible areas where we can divide these tools and techniques. The financial techniques, the data analysis techniques, and Satyajit sir dealt upon it in his talk, and I will dig deeper into that, and we will talk about some of the data analysis techniques which are being used. And finally, the statistical techniques, what can be used as a tool with the information which the management accountant will have at his disposal. Now, when I'll also add further on this slide, although we are looking at the information, the financial information, the non-financial information also becomes very, very important in today's world. And as you would have seen in the recent cases where there are frauds and all that, there have been cases where the police or the authorities who are there, they have looked into emails, or they have looked into WhatsApp chats, or they have looked into the call logs which are there. So these type of data, which is normally not used in the financial accounting world, that also is becoming very, very prominent. You can't, of course, as an organization, except law enforcement agencies, nobody will have the access to the call logs data or any of the any such data. But email, which is being used by the employee, is a property of the organization, and many organizations are putting controls around that the no information is being leaked out. This is more valid for cases where information or the business secrets are not sent out, and the organizations are putting in data loss prevention tools which are there to make sure that the nobody in the organization is sending out critical business secrets or the intellectual property outside the organization. So although this slide only talks about the financial related information, the data analysis part will cover non-financial related information also, which is in the possession of the financial institution. So let's talk about these points in little bit more detail as to how this particular tools and techniques which can be used, right? So in case of contribution margin analysis, all of us have studied management accounting. We know what a contribution margin is, right? We know that it's a difference between revenue and variable cost. Now, how can we use it for fraud prevention and control, right? That is the question. And I'll give you a case over here. There was a 30 million fraud which happened at COS. COS is one of the leading electronics manufacturing company in US, and they lost almost $30 million because of the fraud. And the reason for that fraud was that the employees were concealing the sales which were happening, right? And they were not recording sales, but the variable costs remain the same, right? So what it will mean is that your sales will be down, but your variable cost will remain the same. So it will get reflected in your contribution margin. What you expect normally is that if everything is working fine, then your sales will have a certain kind of revenue pattern, and you will have the variable cost pattern which is there. So contribution margin is expected to be in a similar range, or the variation is not drastic. Like in one quarter you have the contribution margin of say 20%, and next quarter it becomes 75%, or it becomes 5%. You will not have such wide variations which will be there in this particular ratio. So when you analyze the financial information, you will be able to detect such cases which are there, where a skimming of sales which is there, or there is a theft of inventory which is happening. So that kind of information you will be able to gauge based on the information which you will be having. When you analyze it at the product level, or at the divisional level, or at the location level, all this information, when you analyze it, you may be able to find out what are the trends which are there, and if something is not in line with the normal trend which you are expecting, and that will give you a sort of early warning signal or a red flag that there could be something wrong. Not necessary that every red flag will be a fraud. There could be genuine cases where there would be variations, but it gives you an early warning signal, or it tells you a red light signal that there is something which is going wrong, and there is a possibility of a fraud which will be happening over here, right? So that is what is the first technique which we know, all of us know how contribution margin works, but this is another way of looking at this from the fraud prevention and control angle. The next technique, what we typically use in financial accounting and management accounting, is the budgeting and variance analysis, right? So budgeting and variance analysis, when you look at it, what is it really talking about? How you are defining the budgets. You are defining the budgets based on your past track record. Secondly, based on your business strategy. You are also factoring into economic environment which is prevailing. So for example, if it's a COVID situation, your budgets cannot show that you will be able to grow at 50%, except some industries like the teleconferencing industry has shown more than 50% growth or 100% growth. But in all other industries, what you would see is that the growth will be very, very subdued, which will be there. So all these factors you would have factored it into your budgeting, and when you prepare the budgets, it will also have inputs from various departments. The institutional knowledge will also be going into that budget which is getting prepared, right? So this is a normal event when you are expecting to see some numbers which are there. So when there is a variance which is there, which is unusual in nature, that apart from the analysis what you do as part of management accounting, that will also give you an indicator for the frauds which might be happening in the area. And one such example, I will just give you a simple example, which is in terms of, say you do the purchase variance and you have a very high purchase price variance which is there, right? So what could it mean is that there could be what you might be buying is at a higher price than the market or what you anticipated the price to be. So there could be a sort of employee collusion might be there with the vendors and suppliers. There could be kickbacks which might be happening. So that could be an indicator of it. Not that every price variance is a fraud case, but that is an indicator of it. Similarly, material usage variance which you have, right? So if you have a higher material usage variance which is there, so that can tell you that possibly there is something wrong which might be happening. The inventory is being taken out without the knowledge, and that's why that variance is shown on a higher side, right? It could be also short shipment or the non-receipt of the merchandise. That could also be happening. Or you are actually not shipping the goods. The goods are being taken out, finished goods are being taken out, but they are not being accounted. All those kind of things will be, you will be able to figure out from the budgeting and the variance analysis which is there. So that is one other way of looking at the management accounting tool which we use, but it with a different lens with which you can look at it, and that can give you an idea that there could be something going wrong. So for example, the cost example which I gave you, right? So the cost example, in that particular case, if the analysis would have been done at that point of time, they would have been able to figure out that the sales are not getting accounted, but the costs are increasing. The material variance would have shown higher. The other variable cost would have been shown higher, and that would have got reflected in that analysis, right? So that is how you can use the budgeting and variance analysis. The third method which we typically use is the ratio analysis, which we all know. We use this day in, day out. We have various ratios which are there. And I will give an example from the banking industry when in a while how we use that ratios which are there. And but what ratios are trying to do is that it is giving you the relationship between the two variables which are there, right? So that is how you can figure out. So typical case in a banking scenario is that the borrowers, what they will try to do is that they will inflate the financial statement, falsify the financial statements which are there to show higher amount of assets or higher amount of profitability which is there. But we know it's a double entry which is there, right? So somewhere that second impact has to happen, right? So that second impact you will be able to figure out in the ratios which are there. So you can figure it out in the current ratio, or you can figure it out from the liquid ratio, you can figure it out from the turnover ratios which are there, or that kind of a thing you will be able to determine based on the ratios which you are seeing, right? So that is how the ratios analysis can be used to figure out the deviations or the anomalies which are there, right? So that's a third thing. Key risk indicators are the indicators which will give you an early warning signal. So they could be key performance indicators as well as key risk indicators which are there. And we will see some examples of that in the subsequent slide. So I will hold on to that particular box which is there, right? So these are financial techniques. All of us know that how the techniques are being used, but with a different angle, we can apply them to the management accounting and the fraud control activities. The second area, which is called the data analysis area, and this is what Satyajit sir was talking about, that you can use the data analysis techniques to get some trends, some anomalies which are there, and that can help us in focusing on the areas where the possible frauds could be happening, right? One sort of dichotomy which has happened in recent times is that with technology we have got abundance of data, right? And this data comes from disparate information sources which are there. So what in effect happens is that you have got the large amount of data, but there is no relevance or clarity or accuracy in the data. As a result, what happens is that you are very much data rich. If you ask me, you have got the data, but that data you cannot apply it and use it for your analysis or even fraud prevention activities because the information in that data is poor, right? So you have the data rich situation, but information poor, kind of a paradoxical situation which is there, right? So what you can do is that typically the organizations were using the manual interpretation techniques which were there. So they would look at the data, they will try to do the analysis, charts, graphs, all that kind of stuff they would try to do. But if the data is of large volume, then you cannot use this type of techniques, and this is where the data mining techniques which have to be used. So what the data mining techniques do is that they will unravel the patterns which are there in the large data sets which are there, and it will consist of techniques and algorithms which are there, which will help us get that revelation about the underlying data or anomalies in the data from the large data sets which are there, right? I'll take few more minutes on talking about data analysis because this has become like a heart of this whole activity. It is no longer just financial number crunching which is there, and data analysis is becoming very important. And we as members of profession, we should be aware of the tools and techniques, and of course the institute is also taking steps to enhance our knowledge in this field. But at a very, very high level, there are two types of data mining techniques which are used. One is called descriptive. And in descriptive, what it means is that it will tell you the general characteristics of the data, which you can figure out from the charts or graphs or other visual aids which are there. So a lot of visualization tools are available in the market, which will be, with that, you will be able to see the trend. You can see the graphs, pie charts, and all those kind of things you will be able to do. Predictive, on the other hand, what it will do is that it will draw inference from the data and it will try to identify the patterns and trends which are there within that data, right? So that is how the difference which will be there. One other important change which has happened in the technology world which is there. So you must have heard the term RDBMS, Relational Database, which we have been using for ages together, all our systems. The ERP systems or all the core banking or all the systems which are there, they are typically based on the relational database which is there, which is a structured data which is there. So you will have a predefined structure to the data, and based on that, you will be able to do the analysis. But the world is no longer simple, and as I said, there are other areas which are there. For example, email. Right? So you can't define that email will contain this word and it will appear in row number 3 of the email always. You cannot have such kind of predefined structure to the data which is there for the information source like say email. Right? So email is an unstructured thing. You have got a lot of cameras which are being put in at multiple places which are there. And that camera again, whatever pictures are being taken, that's again an unstructured data which is there. So if a fraud is happening, actually you can see the videos recording which is available, and you will be able to figure out who has done the theft or anything of that sort, right? Whether the goods are being taken out, you will be able to determine based on that video recording which is there, right? So, but that's an unstructured data which is there. Right now, that structure, it cannot be put in the normal relational database which is there. And that is where a concept of big data has come into picture. So what big data will do is that it will be able to store this unstructured information which is there, and that information then can be used or analyzed. So what you can do is that, for example, in banks, you have the CCTV cameras which are there, which are on the cash counters or cashiers cabins which are there, right? So if there is a cash theft which happens, you can actually see the recording, what happened on that particular day, and you will be able to get that. Now, where do you store this information? You will have to store it somewhere for a certain period of time. Or if it's an investigation which is happening where law enforcement agencies are there, you have to store it for a longer period of time, right? So that is where this big data concept is coming into picture. And with big data, there are two additional terms what Satyajit sir talked about have come into picture, which is the artificial intelligence and machine learning. So in a layman's term, what is artificial intelligence, AI or ML as it is called in short, what it will try to do is that it will try to identify the patterns which are not normally visible to the human eyes, right? So it will try to identify such patterns, and the advantage in this AI ML technology is that the system itself will learn based on the past experience, the actions which we took. When you saw the results initially, did you act on it? Did you not act on it? What kind of additional analysis you did? With that learning, it will fine tune its own methodologies which are there. So it's a learning which will happen on its own within the machine which is analyzing the data. So it will give you more power in your hands to do that kind of thing, right? So one other thing which is required is that there should be a meaningful aggregation of the data which is there. So it could be structured, unstructured, numeric, technical, numeric, textual, objective or subjective, all these kind of things which have to be got together, and then you will try to identify patterns and all that, right? So what happens is that in many cases, you may not be able to do it in a manual method, and that is where the mathematical models or the computer algorithms will also have to be used in such activities which are there as part of the data mining activities. One other area which I have not touched upon is that social networking is becoming very, very popular nowadays. Everything what you do immediately, you put your photo on Instagram or Facebook or anything, right? So many cases, the fraud related leads you will be able to find out from the social networking sites also. So there are tools which are available from where you will be able to get this information from the social networking sites or the emails what we talked about before, and that will be able to we will be able to use this tools and techniques, the AI machine learning related techniques which are there. We will be able to get that thing analyzed, right? What you also have to consider, and this is where Nandaji already talked about, that not only you will have to look the data which is there inside your organization, but you will also have to look outside the organization. There could be frauds which might be happening in your peer industries or peer group which are there. Or it could be happening in other industries also, need not be in your industry, but it could be in another industry. So you also need to correlate that particular data also as part of your data analysis. And when you do this data mining analysis, typically three sort of techniques which are typically used. One is called the association analysis. So what it does is that you will try to link the data attributes together, right? And this is typically used in the marketing context. So how to position the goods on a shelf in a departmental store, right? So when you sell the nails, right, you will also sell the hammer together, right? They will go together, you will try to put them together. So that kind of a thing which is there, which is being used in case of marketing. Now that same technique you can extend it to the fraud prevention and control. So what can happen is that you can also find an association that when the theft took place, who was the supervisor at that particular point of time, or a particular vendor's invoice is processed only by one particular purchase manager. All these and association analysis also will be able to tell you in possible fraud signals which are there. Right? So that is how you can use the association analysis which is there. The second technique is called the cluster analysis. So here what you do is that you try to group the similar data elements into a set, and you create different sets which are there, and the sets are created in such a way that one set will have all the data elements within that set will have the similar characteristics, and that set will be completely different from another set and the data elements which are there in the other set which is there. So there is a homogeneity within one set and heterogeneity vis-a-vis the other sets which are there. So what you will try to do is that you will try to get the information, you will try to cluster them, and there are clustering tools which are available in the market. Like for example, SPSS is one such tool which is there, which can do that clustering for you based on the data which is there. Right? So you can cluster the data. One data set what you have created will have the homogeneity of information. The other data set will be completely different from the first one. And how do we use it? So there is a simple case study which has been used in the insurance industry. And what they did was they took 40,000 samples of insurance claims which are there. Right, and each claim had 200 plus data elements which were there relating to that element, to that particular claims which were there. For each 40,000, each of those 40,000 claims, there were 200 data elements which were there. Right, so the cluster analysis was applied on that, and from that you could draw a conclusion. They could draw the conclusion that there are three dominant characteristics which are outliers. Like the clusters which have got these dominant characteristics, these are the outlier cluster which is there. And that is where the fraud is expected to happen. Right? So three elements which were there, that there was a large beneficiary payment, or there was an interest payment payout, or there was a long delay between the event happening and the submission of the claim and submission of the payout. Now, if you have that kind of analysis, it will tell you which are the particular data elements out of these 40,000 insurance claims which are there, which are likely to be fraud. They are not absolute surety that they are fraud, but these are the cases where there could be a potential fraud which is there, which is based on the information which you already have. So you will look at the past frauds which are there, what were the trends or what were the data elements which were there. You will try to create the clusters, and you will find out based on your historical experience where the possible risk is likely to happen. So this is giving you a predictive capability, what we were talking about. Not only you will be able to figure out, but you will be able to figure out where possibly you are likely to get hit. One other important element in cluster analysis is that it does not assume any statistical model or any statistical distribution. So normal curve or any kind of thing, it does not assume that data will be structured according to this fashion. So it is like doing a modeling for unknown unknowns. You don't know how the data will look like. You also don't know what that data will predict out of that data elements which are there. So there are two unknown unknowns which are there, which this cluster analysis will be able to help us out in terms of finding. Right? The third analysis is called the outlier analysis, and what it means is that the data elements which are there with you, some of the data elements does not conform to the general rule or the behavior, and that could be based on your past behavior, past transaction pattern that could be related to, say, the amount of value of transactions, the volume of transactions which are there. That's where the outlier analysis will be typically used. And this is typically used in case of credit card industry in a very, very big way. You might have also got calls sometimes, right? For example, the way they use it is that they will analyze your past pattern of transactions which are there, that you are staying in Delhi and your normal expenditure is between 1 to 2,000 rupees. So suddenly if you see a expenditure of even $20 in New York, that is a possible outlier transaction, which is not there. You have not done this type of transaction in last 5 years. Suddenly you find that a $20 payment will be done. Typically, the fraudsters also adopt a very unique strategy, is that they will put in a very small transaction first to see whether the transaction goes through. And once the transaction goes through, they will take a big amount and wipe out your account. That is the way they will try to do. They will not put the transaction for $100,000 straight away. They will try to see first if $20 transaction goes through. If it goes through, that means that your controls are weak. Then they will try to exploit that particular loophole in the controls which are there, right? So once this particular transaction happens, it means that there is an outlier which is there. So typically what card companies they do is that they will give you a call and try to find out whether you are really in US or not, right? You can also, nowadays they are also using some innovative techniques. They will go to your social network site and they will see whether you have put in any New York photos or not. If you put in New York photos, that proves that you are already in New York, right? So that kind of a thing. Also, you may use some innovative techniques for your investigation purposes. But the fact of the matter is that you will try to analyze your historical behavior in terms of value, volume, the time when you do the transaction. For example, your transactions are happening between morning 8 to evening 8, and suddenly at midnight 1 o'clock you are doing a transaction. That also is an outlier analysis which is there, where they will either stop the transaction or they will call you and take an confirmation from you that you have done the transaction which is there, right? So that is how this outlier analysis will be used. And finally, statistical analysis, which is typically used as a regression analysis. And there is a model called Binish model. I have put in a sort of brief write-up on that in the annexure. So what this model does is that it uses the various financial parameters which are there, and it generates the M score, which will tell you the probability of earnings management which is there. And if there are any manipulations which are there in the financial statements, you will be able to get the score, and based on that, you can do that type of analysis. So you can use the regression analysis also as part of this thing. We also talked about AI or machine learning related techniques which are more automated in nature. You can even use those techniques, combine this with any of these techniques which are there, and you will be able to do that particular analysis. You can get an early warning signal if some fraud is happening, or you can get, if the fraud is happening, you can prevent it, or if it's a fraud already happened, you can at least detect it early in the life cycle rather than coming to know of it when there is a big damage which is done, right? So that is how the tools and techniques which will be used. As Satyajit sir was saying, this will require an interaction with the various people in the organization, the auditors, the management, the staff which is there in the organization. So the management accountant cannot be doing this activity on its own, generate a report and the end of the story. It is not that. This is not a postman's job. We are supposed to take it to the closure and make sure that the organizational interests are protected. So that is where that interaction part, what Satyajit sir was talking about, will come into play. I talked about the key risk indicators, which are common events which are there. So you can have the key indicators which are there across the industries you can use, like revenue. For example, there is an abnormal increase in the quantity or the amount which is there vis-a-vis the previous quarter or same period previous year or year on year which is there, right? So that could tell you that there could be something going wrong. If it's a manufacturing industry or a trading industry, the sales returns which are there, the quantity and the amount which is there. the debtors turnover, if there is wide fluctuation in the debtors turnover which is there, or inventory related turnover. Same thing you can do for purchases related activities which are there. You can put in the controls, the information which is getting from your financial statements. You will do additional analysis, additional calibration you will do, and you will be able to get that information. So supplier payments, receivables, cash, journal entries is one other thing which is there. Who is passing, how many entries are getting passed, because this is one area where the fraudsters can use the transactions very, very easily. And Manoj sir was talking about the reconciliation area where large amount of accounting entries which are open for reconciliation. So you can peacefully pass an entry, and that could be passed through a journal entry which could just go through the accounting process. So journal entries will require a focus as to who passed the entry, what is the amount of the entry, why the entry was passed. All these things you will have to get that information from the key risk indicators which are there. What I will do as last part of my presentation is that I will spend another 10 minutes or so to talk about how the banking industry is using these tools which are there as part of prevention of control, as well as the monitoring and management accounting related controls which are there. Once we do this slide, I'll be open to take any questions for me or Satyajit sir, which you would like to ask. So in terms of banking and financial services industry, I would like to give you some facts and figures. I was trying to do some research relating to what is the amount of frauds which have happened in India and across the sectors. Unfortunately, I could not get any information across the sectors. But for banking and banking related activities, RBI publishes its annual report, right? And in that annual report, they have published the amount of frauds which have been noticed in the banking sector, the entities which are supervised by the Reserve Bank of India, right? And you will be shocked to know that in 1 year, we have lost 1,09,000 crores due to frauds, right? And just to give you a sort of comparative idea, if you have to construct Delhi-Mumbai Expressway, 12-lane expressway, which is getting constructed now, we require 1 lakh crores to build that expressway. So what it means is that as a country, we have lost 1,09,000 crores. If we would have avoided this loss, we could have easily built this Mumbai-Delhi expressway, 12-lane expressway, which is being envisaged. We could have easily built that. That money would have been available with us as a country to build that. So that's the kind of staggering losses which are happening. And worse information on top of it is that not only you are losing the money, but 80% of those losses are the credit frauds which are there. So almost 80,000 crores have been lost by the banking and financial banking industry because of the prolific frauds which have happened in recent times. I don't have to name them. All of you are reading newspapers, so you know what we are talking about. So 80,000 crores which are lost. So obviously, this is one area where inherent risk is very high, and we have to put more focus, more rigor is required, both as a prevention controls as well as a monitoring controls which are there. And management accounting can play a big role in terms of doing it. And let's talk about that. So when we talk about the credit appraisal and ratio analysis, which is typically done when the banks are lending the money, right? They get lot of information which is there about the financial ratios which are there. So all the ratios we know, debt equity ratio, interest service coverage ratio, EBITDA, turnover, collateral coverage ratio, loan to value ratio, all these ratios they will get from the information which is taken from the borrower, right? And the banks have also specified the policies which are there relating to those areas which are there. So, for example, in case of home loans, there is a loan to value ratio which they have prescribed. right? Or in case of corporate borrowers, there is a ratio which is generally used as a sort of MPBF or maximum permissible bank finance. Although it has been discontinued by RBI, but many banks are still using it as a benchmark because it is very easy to use it, right? So that is what is being used. So what it tells you is that you have done this thing. What you are expected to do is that when you give the loan, you are supposed to exercise due caution. If this does not fall in your standard benchmarks which are there, you are supposed to either reject the case, or if you find the case is worth considering, you have to go through the exception approvals which are there, right? So what the management accounting team can do is that they can run a report on all such cases where there are LTV deviations are there. When you approve the cases, suppose you are processing 10,000 loan proposals for home loans, in how many cases you had the LTV deviations which are there? And what is the extent of LTV deviation? Did you go too much low on that? Right? So with that, you will be able to figure out that your credit risk is increasing, right? Not only that, you will have to ask that question is that why did we do that? Was there any kind of malafide or a fraudulent related intention which was there to have that particular transaction processed, right? So you will get that kind of indicators out of it. Not that every case will be a fraud, but you will get some indicators out of it, right? The other thing what the banks normally do is that they run a sort of report on number of deviations which are there vis-a-vis the policy, right? So if the number of deviations are large, that means that you are diluting your own operating guidelines which are there, and that itself tells you that your risk is higher, inherent risk in the area is higher, even the operating effectiveness is low. Obviously, you are going to hit on a higher risk, and that higher risk, 80% of the cases what we have seen based on the experience, that could be a fraudulent case which will be there, right? So that is the kind of indicator which you can draw from the credit appraisal or analysis related ratios which are there, right? One other thing which is happening is that the borrowers typically try to fudge the accounts and try to get additional financing. So maybe their turnover is not higher, so they will try to fudge the turnover, or they will try to fudge the stocks or the debtors which are there. They will try to do all these tricks to meet the benchmarks which will be prescribed by the bank for current assets or for the revenue or for profitability, which will be typically used by the financial institution. So they will try to bypass the system or game the system, as we call it in the jargon. So they will try to game it. Now, how do you catch it? You can catch it based on the appraisal standards, what I talked about. But what you can also do is that you can look at the areas or the proposals where these ratios were exceptionally different than your benchmark. So that will tell you whether that particular case is a warning signal for you or not, right? Secondly, what you can also do is that, for example, the borrower is having say in today's world where there is COVID happening, if the borrower says that my turnover is going to increase by 100%, and based on that you give me finance, right? So we all know that the external situation is not that you will be able to easily increase your turnover by 100%. It is 100% is even tough in the normal circumstances if it's a sizable baseline which is there. But in a typical situation which we are in today, that itself is a warning signal to you that that particular thing is much higher. So you can even look at it, how much is the turnover increase, what the borrower is projecting. Is he projecting very, very high turnover, which will tell you that, okay, there could be something wrong going in this particular direction. In this particular case, right? So that is how you will be able to use the management accounting tools and techniques which are at your disposal. All this information is available nowadays in electronic form. So a lot of data mining, artificial intelligence, machine learning related stuff can be easily done on all these activities. The second area which is being used as a preventive and the fraud management area is the rating models or the scoring models which are there. And Altman Z-score is one such model which is there. I have tried to give you the flavor of how that model looks like, which is looking at various financial parameters and it tries to predict the losses which are there relating to this particular thing. So you can look at Altman Z-score where you have bypassed this Z-score which is there. Did you do that kind of stuff? That kind of a report which you can learn, right? The third area is in terms of the credit monitoring and early warning signals, right? So the banks, after giving the money, they will put in controls to make sure that everything is working fine with the borrower and there are no signs of sickness which are there. So there will be early warning signals which will be there. They could be coming in from periodic basis, right? So for example, on a quarterly basis, the borrower may be large borrowers especially, they will be submitting the information about their P&L and the balance sheet which will be there. In case of listed companies, anyway, they are also listed on the stock exchange, right? So you can do all that kind of analysis to see if there are any early warning signals which are there. And this quarterly statements, again, you can find out about the stock and book date statements which are there, whether there are values which are fluctuating or not. You will be able to figure out from those early warning signals which are there. The financial institutions also, what they do is that they take the stock and book date statement, because majority of the loans are given which are against the stock and book date statement. So the stock and book date statement is taken. So what the financial institution can do is run a report on this stock and book date statement and find out the cases where there is no movement in the stock and book dates. What it means is that the company is not performing, and if it is still showing profit, that's a warning signal for you. Something fraudulent is happening. They are fudging their account. That's an indicator what you can get. Or in some cases, you can find that month on month, when they submit the stock and book date statement, that values are fluctuating drastically. 1 month, it is 100 crore. Another month, it straightway goes to 200 crore. Third month, it comes back to 75 crores. That kind of stuff, if the fluctuations are happening, because somewhere with double entry accounting, what we follow, the impact will come somewhere. And one of the ways where that impact will come is the area where this will get noticed. So that kind of a thing you will come to know. Another area where that impact will be highlighted is the cash flow statement, because you can't hide anything behind the cash flow statement. It will always bring out the truth. In 9 out of 10 cases, the cash flow will tell you that there is some fudging which is happening in the background or not, right? So that kind of a thing which you can use as part of the management accounting tools and techniques which are there. The operating level people can also use these techniques, but the management accountant, as the eyes and ears of the management, he will have to give that warning signal to the management that there could be potential dangers ahead. He can perform those things which are there, right? Another activity what you can do is that the last 2 boxes I will combine into one, is that you can do a lot of analysis based on the customer, profit, region, staff, profitability, expenses, all those things you can do. You can do the transaction numbers and the value related analysis which can be done, and that can throw a lot of sort of anomalies which are there. And I will quote one example which is there, and this happened very recently in one of the public sector banks. And this particular bank had opened a branch in Delhi, and within 2 years what happened was that they started doing the foreign exchange transactions which were much higher than their peer group which was there, the peer group of branches which were there, the existing branches as well as the branches opened during that time. So the transaction volumes substantially increased, the value also substantially increased. And what they were doing was that they were remitting the money outside India as an import advance, right? And they had not done the KYC properly, and this money went out, and finally it turned out to be a fraud, right? So if you would have been running a management accounting control on this, as to what are the activities which are happening in the branches, what is the profitability, what is the number of transactions, what are the types of transactions which are being done at the branches. And then you would have been able to find out that yes, there is something going wrong. You could have been able to stop it, right? So almost 6,000 crores were lost because of that import fraud which happened, import advance related fraud which is there. So you can, what I'm trying to highlight over here is that you will be able to use your tools and techniques which are available. You are using it for your business decision making right now. but you can extend it and give the value add to the management in terms of the fraud prevention and controls which are there. Right. So I'll take a couple of minutes to summarize and then open the forum for discussion. So what I would like to say is that the example which I gave you regarding the banking and financial services industry, each industry will have its own ratios which are important, and you can draw that same framework across to the other industries like healthcare, for example, or retail or telecom. They are also using some of these blocks which are there. They are also, when they give you a phone, they are also assessing your credit worthiness which are there, whether you will pay or not pay, right? When they are giving you a credit card, the branded credit cards which are given by the departmental store, again, they are analyzing this, how much credit worthiness which is there. So this could be even applied across the other industries also. So you can extend these methods which are there. Two other points I would like to, rather 3 points I would like to leave you with before concluding. One is that as Manoj sir said, the fraudsters are devising new methods, new techniques which are there. So we also have to put our thinking hats, our intelligence behind it. We have to create a risk intelligent enterprise or a company which is there, which not only prevents the fraud, it predicts the fraud and also prevents the fraud and detects it if the fraud happens, right? So we have to also sharpen our tools and techniques which are there. So that is the one thought which I would like to leave with you. The second thought which I would like to leave with you is that technology is a great enabler for us in terms of fraud prevention. And I touched upon the cyber risk related techniques which are there, right? So cyber related risk which are there. So this same techniques you can use for cyber risk also. For example, in how many cases the password failed, right? How many users case the password failed, right? The transaction related frauds, what I talked about, you can also get that particular thing. You can also see if the user is logging in. Normally he is based in Mumbai, but suddenly he logs in on his internet banking from New York, right? So that itself could be an indicator. There is another thing what the banks are doing is that the machine from which you are logging, it will have a specific IP which is there, or the mobile phone from which you are logging, right? If you try to log in from some other thing, the bank's cyber tools will be able to detect that this is different from what you have done in past, and either they will stop you or they will confirm with you. Right. So that kind of tools and techniques which will be employed by the financial institution to prevent that cyber risk. The techniques are the similar, but what you have to do is that you have to use those techniques, and you will have to find out that are such cases happening too frequently. Then you have to sort of sharpen your controls in that particular area which are there. So that is what you will have to do. So the techniques, what we talked about in this particular slide, they can be also applied to the cyber risk related areas which are there. And the last thought I would like to leave with you is that when the country got independence, we were more in the manufacturing sector. 70% was in manufacturing and 30% was in the service industry. Now, as India is progressing, that balance is shifting from 30% manufacturing to 70% other industries which are there, which are more intellectual or more, I would say, intangible in nature. So IT is one such example. You are having all these startups which are coming. They are in that area. You have seen the valuations which are there. So the areas where we are now migrating, it is not that the manufacturing sector has not grown. It has also grown, but the other sectors have grown so much that it has outlived the manufacturing industry. So now the balance has turned into 70-30, 70% service sector and 30% is the manufacturing sector in terms of the GDP contribution which is there. So here what we will have to do as a professional community is that we will also have to devise new methods, new techniques which are applicable for the new world. We cannot be using the old tools and techniques which we have used in say 1990 or 2000. as every decade is changing, the characteristic of the industry is changing, and we also have to also change our game according to that. So with that, I would like to take a pause and open the forum for any questions you might be having. Thank you very much for giving this opportunity, and I hope you find it useful.
Yeah, thank you very much, sir. It was really insightful presentation and deliberation from your side. And today, definitely, we learned that this today's VCM will enhance our knowledge how to detect a fraud and how the management tools can be useful for prevention of fraud. Now, sir, there are some questions from audience, so I would like to take one by one questions. First question is how to trace fraud in non-financial data reporting. This is a question from audience.
Yeah, so I gave you the example of cyber risk, right? That's a non-financial data. From where you are logging in is a data which the bank's financial systems will store, and all other industries are following the same standards. They are no different than doing this. So now internet banking, mobile banking is being used so frequently, and I would go a step further. Not only they are tracking from the machine from which you are logging in, but even the browser. If you are logging in from internet browser and next time you log in from Google Chrome, they will also identify that you are logged in from a different browser, which is not in line with your previous behavioral pattern, and they will try to stop it, right? So that kind of information will be available, and that's a kind of analysis which will be there in case of non-financial data, right? You can also look at non-financial data. Electricity consumption is one such area where you can see how much electricity is consumed and all that, and you will be able to decipher whether the activity is actually happening or not, or whether the activity is happening, the goods are getting produced, but it is not getting accounted for. You will be able to see somewhere in the financial records based on that information which is available in the non-financial data which is available. Like electricity units consumed will not come in any of your financial reporting.
Yeah, sir. Now, another question is how to tackle fraud caused by internal control gaps deliberately maintained by the management.
That's a tough one to crack. As I said, there is a motivation which is there, then there is an opportunity, and then there is a rationalization which is there. So if the management or the custodian of the company itself are having that intention of fraud, there is very little the rest of the organization can do. The organization can identify the trends which are there. From the trends, you can draw inference if something is going wrong. I don't think there are any methods by which you can control the management or its intentions which are there. If they want to manipulate the financials, there is very little a guy who is a management accountant can do it. Having said that, nowadays there are whistleblower related mechanisms which are being instituted across the organizations. So if some wrongdoing is being done, you can complain about it, and in very recent times, not too long ago, in case of one of the large corporate in India, there was a whistleblower complaint, and based on that, the investigation did take place, right? So there are mechanisms which are being coming up, and the regulators as well as the law enforcement agencies, they are insisting that such mechanisms be put in place, and that could be one other way of addressing this issue, but the tone has to be set at the top. There are no two opinions about that.
Yeah. The another question is related to bank-related issues. So bank-related issues, please highlight some issues. However, you have, I think, summarized in precise way. But can you please elaborate again?
So I can, I have given enough examples with that banking related examples, but one such case where the frauds have occurred, right? It's where the security has not been perfected. So the approval said that you have to do the equitable mortgage of the land and building which is there. So what the borrowers have done is that they have delayed that equitable mortgage creation. The borrower has become an NPA, and now the financial institution does not have the perfected security. So you can even run a report of the cases where there is no perfected security which is available. Because nowadays there is a reporting which happens to the regulator. There is a SARSAI portal which is there, where when you create the security, you are expected to report on that particular portal. So you will be able to find out whether such a thing is happening or not. You can even run a report from that portal to find out whether there was anybody else who is having a prior right to that property or not, right? So that kind of a way it can use. I thought I have delved deeper in the banking related areas, so nothing further to add from my side.
Yeah, sir. Thank you very much, sir. Though there are some more questions, but there are time constraints, so we need to sum up today's session. Before sum up the today's session, I would like to invite Naresh Garg, sir, Secretary of Sangrur branch of NIRC of ICI, for formal vote of thanks. Sir, over to you.
Sharma ji, before you hand over, my email address and the phone number is there. If you have got any questions which you would like to ask me, which we cannot cover due to time constraints, feel free to reach out to me through that email address.
Yeah, sure, sir, sure.
Over to you, sir.
Naresh, sir. You are not audible. Naresh, sir, please unmute.
Hi. Thank you, Sharma ji. Good evening, all. As all good things come to end, so is the seminar. On behalf of Pioneer Institute of Chartered Accountants of India, I, CA Naresh Kumar Garg, Secretary of Sangrur branch of NIRC, take this opportunity to propose vote of thanks to those who directly and indirectly contribute to this seminar on management accounting as a tool for prevention and control of fraud, organized by the Committee on Management Accounting of ICI and hosted by the Sangrur branch of NIRC of ICI. I thank our chairman CA Nandaji for their motivation and speak. I further thankful to Shri Satyajit Goshalji, the CM Manoj Fendersi, past president of ICC. I would like to thank CA Pradeep Gaurwali, especially Speaker of the Day, for their address on the topic. With these warm words, I thankful all the members who participate in this seminar. Thank you, Sharma. Thank you very much.
Thank you very much.
Over to Sharma.
So,
thank you to everyone. Thank you to everyone.
Yeah, we sum up today's session now.
Thanks everybody.
Thank you.